You found Michigan's retirement coach, Mike Douglas.
You are good and smart and hardworking. You have taken it upon yourself.
Thank you.
Not you.
Best intro ever.
Talking to podcast listener.
Hey, yo.
Hey, you listen to us on the podcast, watching us on YouTube. First of all, thanks for doing that. Michigan'sRetirementCoach.com is our website. Mike does enjoy the YouTube comments as well, so feel free. But you work hard. You have built your nest egg. You've sacrificed. You've been married. You've had a career. You've had a family, whatever life choices you've made. Maybe you've taken it upon yourself to do your taxes too. A lot of us do. However, when it comes to your retirement, if you're doing it, you might be leaving a lot of money on the table. So, Mike Douglas, Michigan's retirement coach, certified financial planner, independent financial advisor, here to unpack this idea, this notion for us and explain why I think that probably in your working years, it's kind of like investing and saving to your 401k. There's a lot of DIY that's all good in your working years. But once you get to retirement, when you start thinking about retirement, because it is such a long time period now, there's many people who will spend as much time in retirement as they did in their working years, and has also gotten so complicated. You really want to run it by somebody like Mike to ensure you're doing the things you can be doing. So there was this article from Newsweek talking about how a surprising number of people are still taking a DIY approach when it comes to their taxes. Let's talk about why tax planning, not tax preparation, right? Because that's another thing we should talk about, the difference between planning versus prep. Why tax planning is perhaps something we should not DIY, Mike.
So tax planning is tricky because when we look at tax planning versus tax preparation, we need to separate those two lines.
Okay.
Tax preparation and the way we term it is settling up last year's results, right? So in the spring of 26, we will be reviewing with our tax people saying, what did we do in 25 and what are the tax consequences for it? And just trying not to get hit by fees and interest and taxes unnecessary. Tax planning looks at the next 5, 10, 15 years of your life and tries, or if not longer, and tries to figure out how do I minimize the total number I pay in taxes over the rest of my life. Sometimes it makes sense to pay a little bit more now so I can pay less later. We just went through and built a plan with someone the other day as she's 56, 57, right around there.
Okay.
And we were looking at what bracket she's going to be in the rest of her life. And she's in the 22% bracket now, kind of on the edge of 22, almost going into 24.
Okay.
And then as she gets older, and not even because she's got some pensions and things that kick her up into that, and she's a single person. So she's got this income that kicks her into the 22, almost 24% bracket. But when her required distributions kick in about 18 years.
When you are forced by law to take a withdrawal from your pre-taxed IRAs, 401ks.
Yeah.
That's 73
when
years old?
It'll be 75 for her. Yeah, okay. 73 right now. It'll be 75 in 2034.
Okay.
And when we looked out down the line for her, we said, holy cow, once those RMDs kick in, it's going to jump her into today's 32% tax bracket. Who knows what that number is going to be 18 years from now, but it'll jump her into 32% tax bracket. And when we looked at the chart, and her tax rate and amount paid per year shot up on like a hockey stick curve, and she's gonna be paying a ton in taxes. And then I asked her, I said, what do you think the taxes will look like in the future? I know that President Trump's one big, beautiful bill passed through and locked in the rates for now, but everything's for now, right? Like, even though he says they're permanent till someone changes them. So what do we think taxes will be in the future based on $36 trillion of debt and all this stuff? She goes, they have to be higher at some point in the future. I said, I would agree with that. As a result, we may want to consider figuring out a way to maximize your current tax brackets. And so we built a whole tax strategy built around Roth conversion, built around a couple different tools. Now, there is a duration you have to live to get your money back on Roth conversion. Typically, if you pay with money outside your retirement account, it takes 12 years to break even on Roth conversion.
Okay.
If you withhold from your retirement account and you're on the conversion, it takes more like 15 to 16 years. But there is a break even point. For her, we went through and mapped it out. And by doing pretty heavy Roth conversion out of the gate, we were able to make it so she never went above the 24% tax bracket the rest of her life.
Okay.
And so when we built this whole thing out, putting dollars to it, we knew that on about $1.5 million of investment, by the time she died, there'd be at age 100 or so, she would have paid about $1.45 million in taxes. By doing the Roth conversion strategy, we got it down to $900,000 in taxes over the course of her life.
Okay.
So a $500,000 tax savings and a significant jump in the value of her estate at death. So there's good things we can do by looking down the line. But if you want to build more wealth for your family, you need to have a tax strategy. There are incentives available. There are strategies available to you. The political landscape is pretty crazy in a lot of different ways right now.
No.
And I'm not, and that's like, it's been crazy.
Right.
So I'm not even like, this is not a President
about
Trump
sides.
thing.
This is just facts.
Remember last year in 2024 when like on a weekly basis, we're like, this is the craziest thing I've ever heard. Wait a minute.
No, this is the craziest
there was
thing I've ever heard.
There was the debate and we're like, oh, that debate was tough.
Yeah.
And then
there was another debate.
Then there's the shooting. Right. In Butler, Pennsylvania.
God.
And we're like, man, that's crazy. And like the iconic photo, blood from the ear, fist in the air, fight. Everybody's like, wow, that's crazy.
Mm-hmm.
And then like a week later, there's like, the Democratic Party puts Vice President Kamala Harris, as like the front running candidate. And people are like, wow, that's crazy. Like that was a quick turn. Like every week we were doing this podcast and it was like,
whoa.
Can you believe what just happened?
Yeah.
Both sides.
Yep.
Both sides. Can you believe? And now here we are 9 months later. And I feel like we're still saying all the time, hey, can you believe what you just heard?
Mm-hmm.
Did you see? Like, so both sides, political landscape is very crazy.
Mm-hmm.
And that creates turbulent tax scenarios. So we'll see what happens there. The economy is going through an identity shift and it's not business as usual. And when you go through something like that, it can cause more turbulence. The IRS is watching. We know that they have their eyes on everything.
They have to. They can't afford not to.
They can't afford not
to. The debt's 36, 37 trillion. I haven't checked the latest numbers. I try not to. It's very alarming.
Yeah. And so it's a really, really interesting time in the tax world. And I don't say that easily because there's nothing interesting about taxes. But, Kimberly always jokes, she goes, you get so excited about the nerdiest things. And that's what it is. When we go through and we look at tax strategies and she listens to some of the podcasts I listen to or the content I consume, and she's like, are you seriously listening to another podcast about long-term capital gains? I'm like, sure am. I just want to know it all. But that's because when I go through and I look at for our family, I'm like, Kimberly, look what we did. We did this, and we saved this many dollars in taxes and it's that much more in the pocket. She goes, I love this nerdy stuff, So it works out for our family. In the same way for people who are watching this or consuming it, know that there are these things you can do that are legal, legitimate, solid tax strategies that help you avoid paying too much, whether it's Roth conversion, whether you start looking through and saying, hey, maybe I need to start a business of some sort, which is pretty unique. And I don't say that lightly because they start a business. No, the IRS is going to figure out if you create, Prestige Worldwide, which is the name of the entertainment company from Step Brothers that the two guys created. But if you create a nothing company and start writing off massive amounts of money through it, that's not going to fly.
Right.
But if you start looking at how you operate business, should you still be a W-2 employee? Or should you figure out a way to become a consultant for your company, a 1099 employee, which gives you tax write-offs. So now all of a sudden you can write off the price of your car, but now I have to pay a self-employment tax. So there's these little levers we have to pull to see what makes the most sense. We were talking about this off air about just the taxation of retirement accounts and how, knowing and understanding the rules. And there's a lot to it. And it is not a pleasure read, but it's for your family. It's what makes the most sense. So while yes, you can do it. And for a long time, if you're in a very straightforward situation where you don't have those options. So I come from a family, my dad was in the Army, my mom was a nurse, right? Those are not, you can't go to the hospital and say, guess what? I'm a contract employee now. I started my own company and you're going to pay me straight 1099. No, you fall in line like the rest of the, the nurses or whatever else. And my dad's in the Army. He doesn't go to the federal government and say, here's how I'm going to get paid from now on.
But he should. And please video that conversation.
Yeah. It'd be a great skit. Be like walking in and be like, Sarge, I'd like to be considered a 1099. He's going to be like, what are you talking about? Right. So you can't always do that. And it doesn't make sense for everybody. But for some families, there are strategies you can do to be able to write off your car, to be able to write off part of your home, to be able to do these things. And that doesn't come from TurboTax. That comes from understanding the complexities of the tax code and using it to your advantage. So I think that we are entering a phase where it becomes less and less realistic to consistently do it yourself, especially in retirement, where if you pull from the wrong account, I get taxed. If I take too much income from over here, they tax more of my Social Security. Or there's some moving pieces. So just knowing that the retirement tax playbook is changing quickly, having a conversation with someone who understands it is probably worth the time.
Mike and his team, they are here to have that conversation with you. If you have questions, michigansretirementcoach.com is our website and where you can begin that conversation. We also have links posted in the show notes. It's a difference between tax preparation versus tax planning. And at Life Plan Financial Design, they can help you with the latter, particularly when it comes to your retirement and wanting to keep more of your money where it belongs, in your hands, out of the government, in your pocket, I should say, and out of the government's hands. So let's begin that conversation. Again, it's michigansretirementcoach.com.
Thanks for listening to Michigan's Retirement Coach with Mike Douglas. To learn more, visit michigansretirementcoach.com.
Michael Douglas is an investment advisor representative of Stewards Wealth Planning, LLC, a registered investment advisor. Financial professionals are not licensed in all 50 states. To find out if Michael Douglas is licensed in your state, please call 517-323-7526. Stewards Wealth Planning, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Michael B. Douglas, NPN number 9650939.